In this class also we are continuing with the concepts of cost accounting. Okay, the next concept is contribution margin. This margin is the difference between the sales price and the variable cost. So that is a contribution margin. Ordering cost. Ordering cost represents the cost to place an order, that is up to the stage until the material is included as inventory. So that is known as ordering cost. Development cost is the cost incurred to develop a new product. Okay, that is it may be to either improve the existing product or an improved method in producing a product. So this is called as development cost. Policy cost. This is the cost incurred to implement a new policy in addition to regular policy. Next is idle facilities cost and idle capacity cost. If the available facilities they remain idle and some loss is incurred due to it, then it is called idle facilities cost. If capacity is unused due to repair, shutdown or any other reason, then it is called idle capacity cost. So here capacity remains idle, right? Expired cost. When the cost is fully consumed and no future monetary value could be measured, it is called expired cost. So it relates to current cost. Suppose the expenses incurred in an accounting period do not have any future value, then it is called an expired cost. Incremental revenue. This implies the difference in revenues between two alternatives. That is, if you are assessing the profitability of a proposed alternative, so the incremental revenues are combined with incremental cost. Added value. Added value means value addition to any product. That is, it may be due to some process on product or to make the product available, or there may be other reasons, but it also includes the profit share on it. Urgent cost. There are some expenses that are to be incurred on an immediate basis. So delaying such expenses may result in loss to business. So these expenses are called urgent cost. They are not to be postponed. Now comes postponable cost. So we have already seen urgent cost, we cannot postpone it. So here, without avoiding any expenses, if we are able to defer some expenses to future, then it is called a postponable cost. Pre-production cost. The cost incurred before commencing the formal production or at the time of formation of new establishment or the project. It is called pre-production cost. That is, the production is not started. Before that production, we will incur some expenses. So that is known as pre-production cost. These costs are of capital nature and they are also called deferred revenue expenditure. Okay. Next is research cost. These are incurred to discover a new product or to improve an existing product, either method or process. Then training cost. The last concept of cost accounting is training cost. These are the costs that are incurred on teaching, training the apprentice of staff or the worker inside or outside the business premise in order to improve their skills. So this is called training cost. In order to improve the skills of workers, we will be providing them with additional training. So the cost incurred for such trainings are called training cost. So all these are the concepts covered in cost accounting.